Welcome to the Maveric Banking Edge podcast series, episode 4. On today's podcast, we are joined by PJ Giamarino, CEO of JWG, and Deepak Butter, independent consultant, risk management and regulatory compliance, hosted by P. Venkatesh, Director, Thought Leadership, Maveric Systems.
Welcome to the Maverick Banking Edge, thought leadership publication on regulatory. And I have with me PJ Giamarino, a well-respected name on the regulatory side, who was earlier the COO technology of Barclays Capital, and an early technocrat who identified that the regulatory landscape has been changing and set up a regulatory think tank, JWG, and has been leading that since 2006. This is a principal source for many of the C-level executives in banks across the globe. Welcome on board, PJ.
Thanks, Venkatesh. Really great to be here as part of your Edge program.
Welcome. I also have Deepak, who has 20 years of experience on the risk and regulatory side and has delivered significant engagements, both on conceptualization, implementation, large-scale transformation for banks across the globe. He was earlier associated with Chrysler, leading their risk and regulatory practice on the traded risk part. And in the last few years, have become an independent consultant in his own right. Welcome on board, Deepak.
Thank you, Venkatesh. Thank you for the warm welcome and a pleasure to be here.
Thank you so much. Now, PJ, the title of the report itself, A Rude Awakening, and it also indicates how the regulatory landscape has been changing. What you would consider as the rude awakening to the C-level executives, as well as the key components of those regulatory landscape change?
Yeah, that's a great question, Venkatesh. I think the nature of regulations hasn't changed in decades, if not centuries, right? It's a cost of doing business. It's something you need to do to keep the market safe and your customers happy, and ultimately, the senior executives out of jail. The rude awakening, in my mind, really gets back to what the regulators are up to with their regulatory agenda, and the fact that there's a whole new RegTech market this time around. So if I think back to 2006 or 2005, when the markets regulation called MiFID came in Europe, it was brand new. It was a concept of transparency, and we thought it was really hard because it was hundreds of pages long and lots of detail that needed to be interpreted. And we sort of as an industry figured out how to do that. And then we thought post-crisis that it had gotten really hard, because we had all of a sudden had a G20 level action plan with lots and lots of things in it, and we had to work out how it all fit together. And everyone raced to figure those out, and they said, great, now we're done with all that. The rude awakening this year is all about this global race to upgrade not only all the stuff we've been doing, but a whole bunch of new risk controls. And it's a race, and it's an awakening, because these risks are real and they're here now. Who is accountable when Gen AI harms your customers? What do we do if we don't have Equilend or Ion in the market? Who covers the risk of a trade or a current account if the cloud that it's in fails? Will our clients stick with us with greenwashing issues because of these new regulatory reports? I mean, these are like real concrete problems for the board. And I think what we've seen in digging into the detail, of this report, is that these RegTech obligations have come out of the lab and been baked into the rules. And ultimately, that means that people have to think about these things a lot differently, and they have to think about it a lot more quickly, because this is moving very fast in not very joined up way. And the risk here is that if you don't wake up and pay attention, that you're going to spend billions and not get the kind of results that you're looking for. And your senior management will face some tough questions.
I appreciate that, PJ. I really appreciate that. Now, Deepak, turning to you, I heard PJ mention that there is three different directions in which the risk and regulatory landscapes are changing. On one side, because of the technology elements of the non-financial risk, and second, he is also mentioning that the ground rules for business are changing, and therefore there is a substantive amount of new risks which have emerged, which need to be handled. And the third, the regulatory perspectives also have changed, and therefore they are tightening the measures. Can you highlight how these have been addressed in the report?
Sure, Venkatesh. Yeah, so like PJ correctly highlighted, and maybe going back to from when the 2006 and 8 crisis, right? Uh, there always has been a focus, very strong focus on the financial risk, that the banking industry is facing, right? And by now you would have expected that to sort of be sort of managed well, right? But 2023 gave us some root shots as well in terms of the banking failures, right? So we have started seeing the regulators taking a sort of relook at the very fundamental financial risk management itself, right? So that's one focus area, definitely, right? But the larger story, right, in terms of where the whole industry is moving, and the confluence of technology also, is the threats, the new threats, right? Some of which PJ highlighted, which now the regulators are looking at very closely, right? Earlier they were not even within the purview of the regulators. We have new players, like the Fintechs, right? Who are not under any regulatory purview, but have a huge, and big impact on the financial system today, right? We have had third party vendors, right? But some of these third party vendors have become pretty large now, right? And they have not been under the supervision of regulators as well, right? And the interesting thing is, with technology coming in on top of this, right? The interconnectedness between the technology, the new players, some of the unsupervised supervised areas has actually meant that the non-financial risk, right? Gen I or the cyber, it's not as easy summation like 2 plus 2 is not 4. It's much larger than 4 here, right? And that's what the regulators are looking at, right? We talked about AI and the cyber risk, right? Now these are not technology risks which are specific to a particular bank. Now they have a much larger systematic impact, right? So that's a larger story, right? uh, Now, in terms of from a risk management perspective for banks itself, right? I think if we just go back to the very basics, right? We measure risk by the likelihood and the impact, right? And now we know that a, the likelihood has gone up, and b, the impact also has gone much up for many of these non-financial risk, right? So for example, today, for a fintech or a payment domain, right, it's not really the interest rate risk or the market risk which is as disruptive, right? It's actually the operational or the risk is much more disruptive, right? And that is actually causing an impact to the larger banks as well, right? So this where I think we have seen in terms of the regulations and the industry itself. uh, the last part of your query on let's say what are the regulators doing about it, right? I think there are clearly three things which we are seeing, right? There has been a very clear increased regulatory effort, and a much more harmonized effort, right, to develop the guidelines for these new risk areas, right? Getting in place common data standards. There's so much of data points, so many new players. You need to leverage technology to supervise effectively, right? So this is one area definitely we are seeing where the regulators are focusing on. Two, regulators themselves are embracing new technology for risk identification, assessment, right? What we call the subtech also, right? We have big data, AI, through which regulators are now trying to identify risk patterns much more early, right? And you have risk dashboards on the websites of pretty much all the regulators these days, right? So that's another area where regulators are moving at a very good speed. And the third, and I think the most important thing, what we're also seeing is, the role regulators are playing, right? I think, they have started having a much more forward-looking approach rather than, just a measurement of risk, right? A sort of ecosystem approach where, they are playing the facilitators, right? Bringing in the academia, bringing in the investors as well in some cases, bringing the RegTech players, bringing the banks all together, right? And collaborating, right? To maybe help identify new risk and develop solutions together, right? I mean, the whole agile thing, right? In the industry, we are seeing the regulators actually taking it, the ecosystem approach, right? The sandboxes and, all of that. So yeah, I think those are the three major regulations, Venkatesh. I think, I hope that answers the query, right?
Pretty well, Deepak. See, PJ, given that there are many undercurrents from a technology perspective, as well as from business and economic context, and new regulators' perspectives, what would you think should be the key priorities of the C-level people and key takeaways for them from the report?
Yeah, I think the big message, listening to Deepak recount all of the things that are in the report, from my point of view, when I talk to board members, is that they don't understand fundamentally what the regulators are asking for is new. It sounds the same, but what they're asking you to do is a lot deeper and with many new lenses around it. So this is a big ask. Right, and it's tough out there in the markets, right? People, the interest, we don't no longer have zero rates. Things have changed. It's a very choppy time. There's still plenty of money to be made, still plenty of opportunities, but it's a tough time to go re-engineer the way you do things, right? So for us, the 2024 RegTech agenda is all about three things. It's balancing fear, greed, and safety. Right, and the fear is the risk created by not doing things to these new standards. The greed comes from, I don't want to think about that, I just want to make money, or worse, I'm just going to cut costs, and I can't do any of the things well that I used to be able to do. And the safety comes back to benchmarks and being able to do things to an industry standard with industry standard tools. And I think that ultimately each board needs to work out what that means for them. It's a very personal thing. There is no such thing as I can cut and paste a rule book into my operation. Every business has to make those judgments, but each board has to figure out how are they balancing the business needs with the customers' requirements and the regulatory expectations. And in order to deliver value, they're going to have to think about how to adopt some of this new tooling, because it can really, bring the cost-income ratio down and give them a lot more power in the market to be able to seek alpha.
You really think so, PJ?
I do. I think, the data, people like to, come up with silly statements like data is the new oil. I don't understand that, but what I do understand is that there is real insight in what's happening in the market that you need for market surveillance. So I have one requirement where I can get multiple, one investment will satisfy both masters. I'll be able to go to the board and say, look, we'll be able to share trading ideas, and we'll be able to get smarter about what's happening in this region or that desk with the other region, the other desk. And at the same time, I'll be able to spot those behaviors that the regulators are looking for me not to be able to be doing. Right, and that's just one example. I could go on, but I really do think there's business value to be created, and this isn't just a story about you're going to go to jail if you get it wrong.
That's a very valuable perspective, PJ. Thank you. Now, Deepak, how onerous is this, and what kind of a challenge or roadblock that you see banks would face in coming to terms with that?
Right. So I think, just touching upon the points PJ also highlighted, right? I think, there is a lot of data requirements, right? It's not one ask, right? There are too many data requirements, and there are too many changes, and the regulatory, cycles are shortening, right? I mean, it's high velocity, high volume, right? So, I mean, the short message is, I think, banks till date have been sort of, struggling with the regulatory expectations, right? And I think they will continue, it will continue to be challenging, right? I'm not saying they're not going to be meeting it, but it's going to be, challenging for sure, right? Regulatory regulations are also evolving, right? But just in terms of, if I look at sort of very strategically, right? I mean, what we know the remediation programs and what banks need to do in terms of resourcing or getting the data standards as well, right? But I think just taking maybe one level above here, right? I think big banks and the small regional banks, right, have their own unique set of challenges here, right? And we're already seeing how they're approaching it sort of differently, right? uh, Now, to solve most of these challenges, right, banks today, can leverage red technology, right? They have multiple red tech providers, and that's something we have highlighted in the report as well, right? But the biggest problem for the big banks is the legacy systems that they have, right? How do the senior management assess any optionality today, right, in terms of solution, right? They look at the delta changes can be made, right? What's the requirement and the delta cost to it, right? So you are actually starting off with your legacy system, right, and then trying to get in buy-in for the new system. A completely new system is going to be difficult, right? So it's more a legacy mindset, right, which is wired to look at incremental changes, right? And you may not be able to work optimally with this sort of mindset, right? That's for the bigger banks, right? So it requires a bold step for them, to relook at all their processes and still be able to justify it, right? But for the smaller banks, right, I think they are usually much more nimble, right? And today in a more advantageous position, right, to embrace newer technologies, and they can pretty much change their processes, right, in line with the best tools and technologies available in the market today, right? So and I think they tend to look much more favorably because cost wise, expertise wise, or time and effort wise, right, it becomes a challenge for them to do things in house, right? So they are much more inclined to to the innovation which is available in the market, right? So that's, I think, a challenge, separate challenges for the big and the smaller regional banks, right? uh, but what I also see is going to be a big challenges, uh, and I'm going back to the way banks have been measuring the financial and the non-financial risk and so on, right? uh, the financial risk, the metrics, and all of it pretty much has been sort of standardized, right? But for the non-financial risk management, right, the maturity profile of banks varies greatly, right? And what the regulator is trying to do now here is understanding that this is possibly the new systematic risk, trying to bring in common standard guidelines, right, which may be a little challenging for everyone to follow, right? So for example, how do you expect a small maybe regional bank to to quantify maybe the impact of a large systematic operational event which may happen, right? And what sort of policies and processes they may need to maintain to sort of mitigate those risks, right? And it will be interesting to see how all of that then loops back to the operational risk, capital requirements as well, right? So I think that's going to be a challenge as well. We will see a lot of banks trying to move into a common standards where at the very base, they are all operating very differently.
That would be a very, very good thing to emerge.
Yeah.
But while you touched upon a lot of implementation challenges, Deepak,
Yeah.
PJ also mentioned right up front there is an understanding issue in terms of what the new regulations are.
Yeah.
Do you also see that as a challenge?
Yes, yes, yes. I think again, two things, right? A, risk has traditionally been managed and continues to be managed in a very silo way, right? But today, I think and I think PJ highlighted the three or four lenses, right? you are getting in newer categories of risk or even regulatory compliance requirement, the ESG, for example, right? Now there's an interplay here, right, of ESG itself with the financial or the non-financial risk, right? So that appreciation is needed, right? And it's important that banks have a holistic view of all the risk and the interplay between them, right? Two, I think uh, it's also important for banks to preempt, if I may say so, or try and understand the direction regulators are taking, right? Very long we have been sort of reactive in approach, very tactical in after the regulations have come in and stuff, right? I think you need to try and be a little proactive here, try and understand the direction that regulators are taking, right? Which is also sort of important, I think, from the regulatory perspective, right? Uh, and I think, once you get these two at a very high level, you understand these two, right? I think, it is going to help you, right, prepare your technology roadmaps, right, as well as the infrastructure that you need, right? I think, and banks actually may very well use this opportunity, right, to move to the better options, if I may say so, today, right? I mean, something like a cloud architecture is something we have highlighted, right? I think why don't we use this opportunity to move to something better, right? I think rather than just look at meeting the compliance requirement. It is the way you manage data, the way you manage regulations. It can become a source of competitive advantage, right? Rather than just help you meet those compliance requirements.
I understand. See, PJ, you also mentioned, that banks with the traditional thinking may not be able to solve and ride through this well. And given those kind of a challenge, both in understanding and in execution, is it a structural issue or is it a competency issue or it is an intent issue, which you see as the most critical one, PJ?
Well, it's definitely a strategic issue, and it's definitely a cultural issue. I remember way back when I had senior bosses at banks, I would get told, look, we just need to make money and stay out of jail. Those are the two things you have to help us with. Now think about all the layers of complexity that are in the rules in the last 20 years. We've gotten very detailed. And it now comes down to, well, is that really how I'm thinking about it? Because really now what I want to know is who's accountable for every bit of the operation. And when I say operation, I don't mean taking orders and doing trades or satisfying customers when they call. I mean, taking that latest regulatory text that says we found something bad, you need to be careful of how you do this, like we had last month from the Financial Conduct Authority saying, you need to look out for these kind of behaviors, and we find that people aren't doing those very well. That means the inspector that's coming to my office is going to ask me some hard questions because they presume I read that Market Watch newsletter 73. And they're going to expect me to be able to say, well, this is how we manage those particular type of surveillance scenarios. And I think what that means culturally for me is that this division between just running the bank and I'm out there in the market, I'm making money, versus changing the bank really starts to blur. As does the lines of defense. I can no longer say I'm just here as first line making money and I can kind of control what I do. And those guys in the compliance and legal and risk, they can check me after. That's changing. Right, it's all becoming much more integrated, much more real time, much more transparent, much clearer expectations and frankly benchmarks, because the regulators are able to work at a lower level of detail and have peer-to-peer comparison. So it doesn't matter whether you're small, medium, or large. Everybody got fined for voice recording in the U.S. last year, or WhatsApp issues, e-communications problems. And they're very careful to pick really big firms and really small ones, and just to get the message out there. So if you think you're going to be able to hide because you're not a big guy, I think you need to think again. And if you're a really big guy, you probably have everybody crawling all over you already, and you have senior management meetings trying to figure out what you're going to do about it. But just recognize that everybody's really in the same boat right now.
That's a good one to happen, isn't it, PJ? That everybody, irrespective of whether you're small or big, you are on the same stage. Now,
Yeah, and I guess that the big assumption that everybody made was we can change the system quickly because the risks are here and they're here now, so we're going to change it quickly. And it's just that it doesn't work that fast. And I think that's the one, in terms of the rude awakening, I think that's the reality. I mean, that those examples of the things happening in the market I gave earlier are real. I mean,
Yeah.
there are things falling over. These are real risks. So there is an urgency here that we haven't necessarily seen before. And even with things like Gen AI, which nobody knew about a year ago, we now have that baked into legislation that's getting finalized in Europe. And we have dozens of other perspectives on how to manage it that don't all line up. So you really have to think through carefully. Then what does this actually mean to me?
very true. Very true. See, Deepak, PJ brought out two things. That the regulatory and operations are coming together. They no longer can stay as two different divisions. And the risk is real and is now. Now, what do you think are the tools available and suggestions made in the report which will enable people to execute them?
Right. So yeah, I think once we have this understanding, right? Okay, that this is maybe what we do, right? I think the implementation, is the core thing, right? So at an operational level, right? I mean, firstly, I think the industry needs to really look at, maybe what has happened in the past as well, right? When the previous regulations were there and, banks, had to struggle, right? I mean, we just look at the, inefficiency in terms of, the data being, shuttled back and forth with the regulators, right? Every, time, right? We still have, regulators coming back on the BCBS 239, for example, after so many years, right? So I think, and I think data volume we discussed, right? It's not going to come down, right? So, what do you do, right? I mean, you really need to think in terms of how to sort of, reduce the inefficiencies at an operating level, right? Reduce maybe the amount of loopbacks you have with the regulators, right? So how do you do that, right? I mean, you have no option but to move to data standards which are much more aligned to the common industry standards or the regulatory standards, right? So I think that's the so that would backwards mean a lot of internal data mapping you need to do, a lot of process realignments you need to do, right? And the way to do that is through the way you work, right? So being lean, agile, right, is important, right? So we have tried to cover those aspects in the report at a high level, right? I mean, what are the core things that we need to keep in mind, right? So to do this, you need to start having more digital workflows, across, right? Your data architecture, need to be tuned to be able to match the data efforts that you need to do, right? And leveraging all the RegTech and technologies, right? I mean, across your operations, right? AI, ML, APIs, DTPs, all of that. I think you try to cover it, to that level of detail to show, maybe what operationally needs to be done, right? Plus, it's a culture thing, what PJ highlighted, right? I mean, to do all of this, right, you cannot have the regulatory team working alone, right? I mean, it's not going to work out, right? It has to be the regulatory team, the operation team, and I would go as far as to say a lot of other cross-functional product teams as well, right? And you need to start having more cross-functional governance as well on top of this, right? I think that's the culture thing, right? And I think I mean, and I think he touched upon the point, being open, right? And I think that is so critical, right? I think industry also has been working in its own cocoon, if I may say so, right? And if you have to leverage these RegTech technologies and the solution providers, what's available in the market, you need to be first flexible in terms of your mindset, right? On ground teams need to be much more open, right, and outward looking, right? Otherwise, you risk being left out, right? and we have a lot of RegTech companies who bring in GUIs. We have the no code platforms, low code platforms, right? While all of this is there, right? It's actually interesting to note that not a lot of banks are actually making investments in having their people RegTech trained ready, right? If you want to be agile, to maybe convert the reg requirements into your own processes, right? Do you have the know-how to do that, right? So we would love to see that sort of a training being provided, so that people on ground are actually empowered to go and actually implement it, right? So yeah, so RegTech, what we try to highlight is it's no magic pill, right? It's there, right? You need to have the infrastructure. You need to be ready culturally, systematically. People need to be ready to be able to leverage that. And maybe the investments that you make. That's when you start generating the ROI.
See, PJ, essentially, are you saying that the banks have to have a fresh thinking and do a overhauling of their regulatory infrastructure as well as investments in order to tide through this?
Yeah, I'm saying that in this new environment, there's very little strategic advantage in compliance. The people talk about opening kimonos. And it plays differently depending where you're actually based. But I think what that means to me is you need to be more open with your regulator. You have to be able to show them how you do things. You have to be more accountable in terms of how are you actually holding yourself to particular standards, which means an openness with the standards bodies. You have to be open with your suppliers, and how you want to rely upon them and them upon you, because a lot of times they're customers as well as suppliers in this industry. And then ultimately your peers. So you have to be able to get around the table, and you're not talking about competitive stuff. You're talking about operational things that really make a difference. And if you're not in that herd, you're an outlier, and that's not a very safe place to be. And there are plenty of legal issues, of course. You have to be manage these conversations professionally, but I think the how conversations, the detail conversations, there are plenty of bodies around. I mean, JWG is just one of them. But we have lots and lots of trade associations we work with, lots of different standards bodies, all trying to do things like the common domain model, which is spelled out in the report in some detail. There's a great effort there, thinking about how you leverage the way people should manage their business flows and events to a common standard in order to do regulatory reporting with all the different derivatives reports that are going on right now. Thinking about how you extend that to look at using open source tooling for ESG reporting. And as I say, this stuff is sneaking up, right? So you're collecting data on 50,000 companies this year to be able to go into reports for next year for the CSRD directive. So if you're not working on those things now, you're too late. And it behooves you to get into the herd and help figure it out quickly.
I understand. I appreciate that. See, Deepak, do you really think there is enough technology and components available to manage this?
Definitely, I think so, right? I think we are seeing clearly, I mean, on both sides, right? Regulators using a lot more technology, like we discussed, right? And I think for the banks also, it's helping. Let me put it this way, right? I think it's helping banks do the compliance needs, so it's doing the protect function, right? And the risk management as well, right? And it's also helping them grow, right? I mean, today, it's not the it's not a same category of RegTech providers on the market, right? I think we are trying to understand, okay, what are the new things being brought about, right? And some of the examples PJ gave in terms of, let's say, the ESG or others, right? Once you start using them, it quickly becomes a source of competitive advantage, right? And we see a lot of banks going that route. There is a noticeable shift, right, in the way RegTech companies are now providing very niche areas as a service, right? But niche areas, but solving some significant business problems as well, right? So it has been playing a critical role. Otherwise, banks would not have survived. But I think how banks will adopt technology, right? I think that is also going to have a significant change, right? I think that definitely is going to be an important parameter, right?
Now, Deepak, you are essentially saying there are tools available which could do largely the intent and as well as an appetite for absorbing them into their architecture is a critical one to
Right.
solve. Eh,
Yes.
Very nice. Very nice. And we have had a very, very good discussion. And what would be the closing remark from you, PJ?
Yeah, I agree. This has been a great conversation, and thank you for the opportunity to help get the word out on some of this. I think, we were early into the RegTech space. 2011, we started using the term RegTech because I was an editor for the Banking Technologies magazine about what JWG was doing. So we called it RegTech, and all of a sudden that got put into a report that was adopted in the UK as a strategic vision. So all of a sudden we had regulators now talking about RegTech, and that so our RegTech presence is mushroomed since. And I think a couple of things. One is recognize this sector is now a teenager, not a toddler. There is some sense of maturity to it. The behaviors may not always be what you want, but they're probably better than you assume. So you can have much more adult conversations and figure out how you can deal with your problems today. So it's a rapidly growing sector, and for that reason, I think there's a tremendous appetite for RegTech now in the market, and has great potential. And ultimately, if you can't do some of the things we're talking about today, don't feel like you're on your own and you don't have any friends to help you sort this out. Just the basics of how do I know what's coming and create lineage between what I do, and how do I prove that I did the right thing. Those are conversations everybody's having. So you're not alone. Get together, and together we'll be getting there better, faster, cheaper, and safer.
That's a wonderful conclusion, PJ. Thank you to both of you for being there in the session. Thank you.
Thank you. And if you need any information to follow up on the report, we keep a live blog on jwg-it.eu, and you can find us on Regcast, which is our own podcast channel, which is even on TikTok now. You can find a few things, but we're also on LinkedIn. So looking forward to continuing the dialogue.
Thank you.
Thank you. Good night.